Now, look, I'm not sure if it's the Melbourne Cup or the public holiday in Victoria, but there were 700 fewer auctions, actually 900 fewer auctions compared with last weekend. Nationally, there were just over 1,600 auctions you can see here. The clearance rate well down on last week as well, 58.5%. In Sydney, 766 auctions. The clearance rate here you can see just a tick under 59%. Now, here we go here. Melbourne had 324 auctions. That compares with more than 1,100 last week. So the clearance rate dipped below 60% there as well. So you know what's going on. It's the Melbourne Cup. In Brisbane, 82 auctions. The clearance rate there, it did pick up, close on 66% here. Now, Adelaide does remain the hottest property market in the country. There were 86 auctions over the weekend. 82.6% of those were sold. The property in Adelaide right now, it's going to sell. Meantime, Canberra had 77 auctions and almost 69% of those cleared. So what's happening out there, and how could another rate rise tomorrow from the Reserve Bank affect the housing markets? Cameron Kusher is Executive Manager of Economic Research for REA Group and joins me from Brisbane. Cameron, always good to chat to you. So this is a big question. Is it interest rates driving the housing market right now, or is it other factors such as a shortage of supply?
Thanks, Ross. I think it's mainly the shortage of supply. You know, we've already had 400 basis points worth of interest rate increases, and most people were anticipating, us included, that prices would fall this year, and that's not come to fruition. And I think one of the main reasons that's the case is the number of properties that have come to market has been extremely low, but also the number of properties that were already on the market was historically low as well. So for people that start looking, there's not much for them to choose from, and then they're hanging out for those new listings to hit the market, and there's significant competition for that stock, and I think that's really the thing holding up prices. The other factor, of course, is the rapid rate of population growth we're experiencing at the moment. Now, that's feeding demand mainly for rental properties, but it's certainly helping support the housing market as well.
So we mentioned earlier on the program about Westpac. Profit result out today. It shot the lights out, and obviously margins have improved for the banks, but they're reporting there significant competition where they've been gaining market share in mortgages. But quite clearly right now, anybody who's seeking finance, who's obviously got a reasonable credit rating, is able to still get that finance. And that, again, is driving these housing markets.
It certainly is. And if we look at the areas of the markets that are really active, we're starting to see some more investment coming in, and it's not enough to offset the investors leaving the market. But we also know that downsizer market is extremely strong as well. So if you look at credit growth is fairly benign, but we're seeing strong sales volumes and we're seeing a strong pickup in price growth, which suggests to me that it is those better quality borrowers. You know, people may be buying with cash, but otherwise people buying with lower loan to valuation ratios that are really driving the market at the moment.
And there's one other aspect for investors. If they're sitting tight knowing the rental markets are tight, they can almost factor in an increase in rental income over the next 2 to 3 years at least, which helps to overcome the mortgage regardless of where interest rates go. So that's something, and especially when the stock market in particular, by comparison, is been pretty shaky and certainly, if not down, and certainly flat over the past 12 to 18 months.
I think in terms of the investors, as I said, we're starting to see some more of them coming in, but there's not really a hurry for investors at the moment. They probably want some certainty that interest rates have peaked. And, you know, a couple of months ago, it looked like we have had that, but it doesn't look like that may be the case anymore. But rents are just continuing to climb. You know, you look in Perth, rents are up more than 20% over the past year. Sydney, Melbourne, you're seeing double-digit rental growth. Brisbane and Adelaide as well. I was looking the other day, and you know, unit rents in Sydney in the space of 12 months have gone up an average of $120 a week. So, you know, it's getting more attractive to invest, but really for a lot of them, they just have to wait for the right opportunity. They don't need to jump in right now. And on the other side of things, we do know that a lot of investors are exiting the market as well. So that's creating some more opportunities for them too.
And just a real quick one for you. Tomorrow's interest rate decision from the Reserve Bank, are they going to raise rates? And is that a problem for the markets?
I think they are going to raise rates, and I think that's largely an inflation issue because we haven't had inflation falling as quickly as the Reserve Bank had hoped. Is it an issue for the market? I don't think so. Another 25 basis points. We've handled the 400 we've had to date quite well. In saying that, You know, most people were assessed at their ability to repay the mortgage 2.5% to 3% higher than their interest rate. And now we're significantly higher than that. So every interest rate rise from here is probably going to push some borrowers closer to not necessarily default, but maybe having to consider selling a property, downsizing into something that's a little bit more affordable. But I don't think it's going to be catastrophic for the market in any way, shape or form.
Cam Kusher, always good to have you in the program. Many thanks for your time today.
Thanks, Ross.